The fact that the market
Yeah.
doesn't see it at all is what makes me really excited
Mhm.
about it. If there were 100 YouTubers making videos about Path and the stock was reaching new all-time highs, that's when I would be the least interested in it. It's right now
Yeah.
when no one is thinking about it, that's when the opportunity is the biggest.
Hello and welcome to How to Invest. In today's video, I'm going to be interviewing Jake and just how he learned about UiPath, what kind of sparked his conviction, and go a little bit more depth in that. Right now, he's joining us from Santorini in Greece. So how's Santorini been so far?
Oh, it's nice. It's super, super nice. It's beautiful. It just hit me like a few days ago that I'm literally sitting on the edge of a volcano looking out into a volcano swallowed by the ocean. So
Yeah.
yeah, it's pretty cool. It's really nice here.
Yeah,
Yeah,
definitely a unique landscape, it
yeah,
sounds
for sure.
like.
Well, let's get into UiPath because UiPath's even more exciting than Santorini. So,
Okay. Well, so we'll start. I have a few questions prepared for us. So, just to start off, when did you actually first learn about UiPath? Like, is it
so I've been
something you learned about
following.
last week?
No, I've been following UiPath for a couple of years. It really didn't have a big pump. It went public in 2021, and it went public kind of late into the cycle. So like right after it went public, it went up a tiny bit, and then the whole market started crashing. So it went from 80 to 10 real fast. And then it's kind of been bottoming between like 15 and 10 for like 3 years or 4 years or something like that now. So it's kind of been down and out for a while. And I have had it on my watch list for several years because it matches a lot of the tickers of the sort of things I look out for. For
Mhm.
example, it's still run by its founder. The insiders have a ton of ownership of the stock. Um, and it's also in a really interesting space doing enterprise automation through RPA, which is robotic process automation. And I have actually like added it. I've even added it to my portfolio a few times. Just because like I tend to just like buy a little bit of a stock if I'm start getting interested in it, so that I can research further. But like the last several times I've done that, I've just gotten really excited about another position or something else that I really want to build out way more shortly after. And I've never really held it for more than a month or two, which isn't really investing. So it's just like making a very small speculative play. Because psychologically, when you own a little bit of it, it makes you far more interested and motivated to really dig in and really understand it because now you have some chips on it. So I kind of just use
Mhm.
that a really small amount to trick me psychologically without it actually have like it being an amount that can affect the real returns of my portfolio. So I've even owned it a few times over the last couple of years. But when I started looking into Palantir super heavily and understanding it a lot better because of Amit's videos, around $5, $6, $7 of Palantir, um, I really started to understand. Okay, wait, what Palantir is doing with AI, enabling artificial intelligence to really automate processes and understand all your data and give you really great insights inside the enterprise business is probably even more valuable than what UiPath is doing with robotic process automation because RPA, it's entirely rules based. So like um, UiPath actually does have some AI. Like they do have some AI to actually let RPA work. For example, they do AI image recognition so that the robots can actually see what's on the screen and can understand what they're looking at. So you need to train AI to be able to do that. But then, like if it's like a medical company, for example, and you have the bot gathering medical information from your customers, the bot just needs to know, okay, this is the customer's medical information page. And with AI, the bot understands each of the fields that it sees on the screen, can gather all that data and put it in whatever document you want and automate that process. So UiPath has actually always had AI parts of it because AI has been very helpful to actually enable the functionality of robotic process automation. However, LLMs being a part of this process was not a part of RPA. Because like AI is like we think about it like ChatGPT, but it's actually a lot more than just ChatGPT. Artificial intelligence goes into way more than just text-based prediction. So they didn't have the text-based prediction side, which allows for like more logical analysis, reasoning, that sort of what we think of like the human spark of intelligence isn't actually part of RPA. Even though some other parts of AI are part of RPA, like understanding what's on the screen so that it can gather the relevant data and transition it wherever you want based off of the rules that you have set. It can see the right button and click it. No, that's the next step. But it's not going to think about what that means. It's not going to understand what the data that it's moving over means about the patient. Whereas AI adds that whole additional capability that can potentially make it far, far more useful because now not only can it copy data from one place to another, fulfill an invoice, but it can understand that like, hey, this patient actually has this really big issue that you guys need to be focused on here, and like he can get real insights and stuff like that. So I have been following UiPath because I've felt like it was in a good position as a company already doing enterprise level automation in like the top 10,000 biggest companies in the US, that it would be in a place to potentially be able to harness AI in the like language model sense a lot better or quicker than a lot of other companies that don't already understand how to read a computer screen and operate Salesforce software with a robot, like that sort of thing. Like they already have a lot of advantages, a lot of tools that if they could hook up the AI and the RPA tools, like all of a sudden they make the AI super useful. And then they also already have like the ability to understand data, like contextual data. They can connect your Snowflake and your Google Drive or wherever your enterprise is storing your data. It can connect disparate systems, siloed systems, into one like plane where you can view your data inside of UiPath software. And that allows UiPath to give the relevant data and context to the AI that it needs to actually do the jobs. So when you're building a fully automated process that utilizes robotic process automation and AI, it can also connect to the relevant software that the AI needs to be able to access and have the relevant data from wherever it needs that so that it has the context to do the job right. So it just seemed like a company like in a good spot where if they could figure out like putting it all together, they would be able to be like way farther ahead than other companies that are just trying to copy Palantir from scratch. And it's why Palantir's AIP was so useful right away because they already had Foundry. They already knew how to connect your enterprise data and do useful things with it. So adding AI into that, and they also had really good accountability as well, which you also need for AI to do work in an enterprise. You need to know exactly what it's doing, be able to track every decision, all the reasoning behind everything, and actually be in the loop where there is human accountability that's necessary. But once again, UiPath already has a lot of that same stuff as well. So yeah, it just hit me several years ago as a company that if they could get the software right, would be able to be really big in this agentic automation market that I think is going to get very huge, over the next decade. But until I saw the software, it's okay to have that hunch, but there's no guarantee that they're going to be able to put it all together. So it was just like a month ago or something, where I finally they just released Maestro, which is their agentic software, which you can kind of think of like it's their version of AIP that they're adding on to their previous software foundry. They just released Maestro in February of this year, and I it was like 3 months, after they already released it, after they already did some of the demos, that I finally relooked at the company again because I can't be continuously tracking all the companies on my watch list at once. So I rotate through and look into them periodically to see how how they're doing compared to what made me interested in them. And Maestro kind of blew me away. I was like, oh my gosh, this is going to be really useful. And then they already had, when I was looking into it, customer interviews as well, where like Geisinger had already saved 100 million through the agentic software. And I forget the company's name, but another one had saved 18,000 man hours through using Maestro. And I was like, wait, these are like the sort of interviews I was seeing from Palantir when AIP came out. So not only did I like the demos and like could see how, wow, you can actually automate an entire claims process in insurance or something with Maestro. Like this can actually orchestrate everything together. And I could see how it works. I could understand it. But then you actually hear the customers saying, hey, this is how much we saved. This is how many hours we saved. This is how much money we saved. And I was like, okay, this really now has gone from they're kind of in a good place where if they could get this together, I think, they might have all the ingredients they need to make a really good recipe here too. Oh, wow, they actually cooked something. And I think that people are liking the taste, which once the product is already there, it's much easier to bet and say, okay, yeah, this product's going to really accelerate their growth because you can see it, you can touch it, you can feel it, you can see the customer's reaction to it. And I think that is the point at which you can have enough insight to say, okay, yeah, I think that they're actually going to be a big player in this market with a decent amount of certainty to actually be able to put real money behind it.
Perfect. Yeah. So you've been kind of following it since IPO, it sounds like. Were interested initially because it kind of had those same, a few of the same ingredients that Palantir had. But they didn't quite have the main ingredient yet, which was the AI automation piece. And so
Mhm.
you kept following it, you added it sometimes, but another opportunity came along. And it was just kind of a dip your toe position type of thing. And what's really changed now to really, jump in and make a sizable position was that AI piece now, Maestro coming along. So how do you go about studying a company like Path? Like, how did you hear about it when it IPO'd? How did you hear about Maestro coming out? Like, where are these streams of information coming in? And then when you get this little nugget, like, oh, I've been following this company, this sounds like the nugget I've been waiting for. Then how do you go about verifying that information? And like, is this actually what you've been waiting for? And how do you learn about the company, the founder, that kind of stuff?
Yeah. So I actually couldn't tell you how I heard about Path originally. However, anytime there's an IPO, there's always a ton of fanfare around it because like that's literally what the company is kind of paying the bank that IPOs them to do,
Mhm.
like raise a ton of awareness. Normally the bank has the executives go on a whole like spree where they're talking on all the TV stations and you normally have like a big publicity boom around an IPO because what's the goal? The goal is to sell the shares of the company to the public. So the public needs to know about a company. Um, so I probably heard about it around then. Plus, in an IPO type environment, you have a bunch of people because there's all this press that are getting excited about it. So anytime there's an IPO, people on X start talking about it, people on YouTube start talking about it. So that's probably how I was introduced to it originally. However, I am a strong believer in what Warren Buffett says that IPO stands for I stands for it, P stands for probably, and O stands for overpriced. So it's probably overpriced is what I think when I hear IPO. And as we saw with like Lemonade, right? Like going up to 180 and then dropping all the way down to like 11, or UiPath up to 80, down to 11. Um, Oftentimes these IPOs are overpriced, and sometimes there's a hype cycle, but then a couple of years later, all the insider shares unlock, and then you just have like a ton of shares just dumped on the public market, and it's hard for the price to survive that. Like really, there should be another hype cycle around the unlock so that you can create buying pressure to counter all the selling pressure that comes in. But pretty much what that means is anytime there's an IPO of a company that looks really exciting to you, do the research, add it to your watch list, and wait. Because probably sometime over the next 5 years, you're going to be able, even if it goes up a tiny bit, like if it grows faster than the stock price goes up for a while or something, you're going to get a better buy-in price later. So that's kind of the strategy that I have around IPOs. Anytime there's an IPO, if I like the company, I never buy the IPO, but I always, if the company looks really interesting, I add it to my watch list and follow it. Another example would be like Airbnb. It's a company that IPO'd recently that I've been following, and I'm really interested in it. And the valuation might be getting attractive enough now, but it's been public doing nothing for 3 years already.
Hmm. Yeah. So
Okay,
how
so
did
then
you hear
what the
about
second part of the
Maestro?
question?
Yeah.
Yeah,
Yeah. How did
so
you hear
so
about
after
Maestro?
yeah,
Go
so
ahead.
Maestro, I just heard about it like redigging into the company. So companies on my watch list, like every company I'm invested in, obviously every earnings period, I listen to all the earnings calls. Oftentimes, I will listen to like the past earnings call again as well for companies that I'm invested in, just to review, okay, what did they promise us, so that when I'm listening to the new earnings call, I really know how things are lining up compared to what management was telling us. But companies that I don't own that are just on the watch list, sometimes I'll go 3 or 4 quarters, and then I'll catch up on all the earnings calls that I missed. So I heard about Meister just doing that. Like I hadn't listened to some UiPath earnings calls for like 6 months or 9 months or something. And I just went through and listened to the three most recent earnings calls, and they're talking about how they're becoming an agentic automation company, and they're talking about how excited they are about their new software. And then the next earnings call, they like name it and talk about how they're going to do a demo for investors on the investor relations page. So I'm listening to the earnings call, and I'm like, okay, well, I need to obviously watch that demo now. So then I watched the demo for investors, and it's interesting. I'm like, man, is there like a more technical demo? So I'm on the YouTube channel, and I find out, oh, look, they presented at Microsoft Build to a technical audience, so then I can watch the Maestro demo there. And because it's for a different audience, you glean different things. They spend more time lingering on different parts of the software than when they're talking to the investors, and you can kind of get an idea. And I started seeing these green flags while looking through the demo where I'm really big. We're really big investors in Lemonade. And the reason I'm invested in Lemonade is because they're fully automating insurance, and they're probably one of the most fully automated companies that exists right now today in the world. And Lemonade has shown demos of some of their automation behind the scenes, like the tip of the iceberg. And some of UiPath's demos, like some of the screens of UiPath's Maestro, looked exactly the same, as far as functionality goes, as some of the screens that I had seen in Lemonade's demo. And I was like, wait, like UI Maestro is literally allowing um, customers that are with UiPath to give like verbal feedback on customer support responses, to change how the AI responds to future customer support messages in a similar way that Lemonade has text-based that they allow their customer support team to send to the AI to improve the responses of their AI to their customers. So you start seeing these themes. So just like when you're in the space, and you know something works for another company, and then you see a company like UiPath building a similar software, or at least that has similar parts to it that they're going to be selling to other people. And I know how well it works for Lemonade. Like if you understand enough, you just start getting this gut feeling where you're like, okay, wait, this is going to be really big. I know this is going to be really helpful based off of everything else I understand about AI and how you can make it, what you need to make it useful inside an enterprise. Plus, because I bought Palantir at $7.70 and have watched so many Alex Cart videos and Palantir AIP demos and all of that as well, um, I'm hearing UiPath repeat the same exact things that I heard Palantir say. And when you've already listened to this, it like matches up, and you're like, okay, wait, like they're putting the same squares into the same square shaped hole. They're putting the same circles into the same circle shaped hole. They're thinking about the problems the same way. They're thinking about the solutions the same way. This is probably going to work.
Hmm. All right, so I hear two major themes there. One, patience. These IPOs come out, and people are trying to generate hype. They're trying to create FOMO. They want people to buy in, and you just historically see over and over again these IPOs, this massive jump right off of IPO and then a dip. And The second thing is you knew what they could do, but that also didn't mean that you bought in right away. So lots of patience. One is this first thing.
Hmm.
And the second thing I heard was tons of due diligence. This is a research intensive industry. And it's not just researching the company that you're thinking about investing in. You're also doing tons of research on their competitors, companies that are similar to them, and you're just really understanding the industry as a whole, and you're able to use all of that cross company information that you're gathering from your due diligence on other companies to even, to type of kind of frame the lens that you're looking at UiPath through. So that's just general for everybody investing. Like, you have to have patience. Like, don't FOMO into positions, and you have to do the research. You have to do the work. And it goes beyond just researching the company you're wanting to invest in. You have to research the competitors, similar companies. You really have to understand what they're trying to sell in the space. So, next question is, what in your mind, kind of lay out for us what the bear case is for UiPath and what the bull case is for UiPath in your head.
Yeah, so the bear case has gotten a lot weaker recently, but the bear case is still the same until we start seeing a huge revenue uplift from Maestro. Because the revenue uplift from Maestro will be the final proof that customers really love it because they're willing to pay. They're willing to pay, and actually being willing to give dollars, that's the final proof that this provides real value to these customers. So the bear thesis would be, UiPath says the next 2 quarters we're still not going to be seeing a huge revenue uplift from Maestro. If it's so good, why is it taking so long? That's something that a bear might say. But what you need to understand, and actually I was listening to a CFO interview, UiPath CFO interview, and he was talking about this, how internally they're really excited about Maestro, but they're in these early pilots and they're building these early pilots in these customers, and they need to prove that it works to these customers, and the investors want it instantly. But like it takes 6 weeks, 12 weeks to really build out a full pilot, and then they might need four weeks to really validate it, before the company knows, like, okay, yeah, this is really working. And then the way that these big companies work, it might be another 6 weeks of meetings internally from the C-suite of that company before they decide to, really buy a big professional version of this pilot they experience. So it can take, 3, 4, 5 months before you go from, and remember, the product only launched that long ago, right?
Hmm.
Um,
Yeah.
of actually running these pilots before you really start to see these super huge contracts come in. And that's what the CFO was talking about. And the CFO is like, I know a lot of the other competitor companies, they'll know that this is what the investors are looking for, and they'll just rename some of the old contracts or something and like claim that they're already seeing that. And they're like, no, we're not going to do this. Like, we're going to be patient about this. And when the contracts come through, they're going to come through. But anyway, a bear would say, hey, we're not seeing the money from this yet. It launched in February. It must be a failure. Lack of patience, as you were just talking about. But
Hmm.
then the other thing is that their RPA business, the current view, the zeitgeist is robotic process automation is going to be killed by agentic automation. So even though they have 108% net dollar retention rate, which means like for every net dollar they're receiving 8% more the next year on average. Even though they have that insane net dollar retention rate, and this is not normal, by the way. Like I was just deep diving another company before this call, and I was listening to the earnings call, and they were really proud about how they had gotten up to a 96% net dollar retention rate. So it's like having 108% is like really, really good. But the bear will say RPA, it's going to get eaten by agentic automation. Almost all of UiPath's revenue right now comes from RPA. So their whole business model is being disrupted. There's no proof that they're going to succeed in agentic automation. So
And
it
it's kind
becomes
of
really
priced like that, right?
exactly. I mean, it's down 84.14% all time. And I only know that because I was just tweeting that today, so I looked it up on Google. Um, Yeah, it's down almost 85% from its all-time high. So it is priced like that already. So that narrative being true, like that they're no longer going to be a growth company or whatever, it's kind of priced like that. It's trading like 4 times sales and has 83% gross margins. So it's not priced like a growth company at all. It's priced like a company whose entire business model is threatened. But like I said, and this kind of idea, like this is a real fear, and this is why over the last couple of years, even though I've bought it a couple times, like a very small position for the optionality to incentivize myself to research it more, I've always sold it off because I was like, yeah, there's really no proof they're going to be able to make this transition. And even Daniel, the CEO, which by the way, I've been calling him Daniel Dines. I realized his last name is actually pronounced Daniel Dines. So I
Okay.
apologize for that. But yeah, so Daniel Dines even says like most companies do not succeed in reinventing themselves. Most companies like they might find product market fit, but when you need to change, very few can like succeed at finding product market fit again. So he's been very humble and honest about this, which I don't think has done favors to the stock price, but I really appreciate it actually as an investor. That he is humble about this and he is realistic about this and he's not trying to trick anyone. He's really not, and that is something I really appreciate because I actually think I can take him for his word when he says like this is really hard. I don't know if we're going to be able to make this switch, but like this is what he was saying 3 years ago. Now they have the
Hmm.
software and they're really
Yeah.
excited about it, and it freaking works. So it's not the
Hmm.
same, and I don't think that bear case really holds as much weight anymore because it went from, in my mind, like maybe a 50-50 that they're going to be able to make the switch, that they're going to go from being big in RPA to being big in agentic automation to I feel like 95%, maybe even 98% certain they're going to be a substantial player in this agentic automation market. And I've become more convinced listening to the more recent interviews from people at UiPath that RPA is actually a huge advantage because it's like a tool that you can give an AI where AI, they don't do stuff that consistently. Like every time you give it a task, it's going to give you a slightly different output. It's whereas robotic process automation, it's going to give you the exact same output every time. So in many ways, AI's weakness, as far as the language models goes, is RPA's strength. As far as like what robotic process automation does is follow rules perfectly, and that's what AI doesn't do very good. But then RPA's weakness, which is thinking outside the box, or like literally, if a software has a new pop up. If Salesforce is a new pop up that's like, hey, we had a new feature here, it can break your RPA process because the RPA is stupid, right? It's just following the rules, and a pop up ruins the screen, and now it doesn't know the next thing to click, and bam, your RPA process is broken. So it can't think. It just does the exact same thing the exact same way every single time. So both like RPA's biggest weakness is solved by AI, and AI's biggest weakness is solved by RPA. So having RPA means the AI for agentic automation that you're doing inside your enterprise with UiPath, it can pass off to all these tools that I think have the potential to make Maestro even more useful for automating in, like full jobs than perhaps even Palantir and AIP, because Palantir wasn't this expert RPA business beforehand. So it doesn't have as many pre-built tools for your AI to use. So its toolbox is smaller in certain ways. Now, they probably have other advantages, right? Like everything's going to have pros and cons. Um, but now I'm more convinced than ever that it's that this whole bear case is even thinking about it from the wrong way. It's not the previous business is becoming obsolete and now they're transitioning into a new business. It's wow, agentic automation is way better when it can pass it off to RPA to do things where you want it done exactly the same way every single time without all of the unknowns that come from using an AI where you don't know exactly what the response is going to be. But you want its reasoning tools to supplement the RPA tools.
Yeah. So in a way, the bear case has become the bull case. The obstacle has become the way for UiPath
Hmm.
here.
Yeah, yeah,
No, very
in a
cool.
really big way, in an exciting way.
Hmm.
And the fact that the market
Yeah.
doesn't see it at all is what makes me really excited
Hmm.
about it. Because, like, if there were 100 YouTubers making videos about Path and the stock was reaching new all-time highs, that is when we would have a bunch of inbound, hey, make videos about Path. What do you think about Path? And that's when I would be the least interested in it. It's right now
Yeah.
when no one is thinking about it, that's when the opportunity is the biggest. And that is where doing the fundamental due diligence pays the biggest dividends when you're doing them
Hmm.
on things that people don't know that much about. And that's why like a lot of people ask me like, how come you don't have a big Tesla position anymore when you made like Tesla made you become a millionaire, you were all in on it. It's like shouldn't you still have it like one of your biggest positions? But the thing is I don't have alpha there anymore. Like when people thought it was going to go bankrupt and I knew it wasn't, that's when I had alpha to be all in it. But now when everyone knows it's going to be one of the biggest AI companies in the world, they're like you can bet with the crowd and be right and you'll make some money, but it's when you bet against the crowd and you're right when you can make a life-changing amount of money.
Yeah. And also there's the asymmetry of the bet as well. So like when it first IPO'd, like you were saying, it's like more of a 50-50 chance. Stock price is elevated. You don't know if they're going to switch to this AI. Even after the stock price came down and has kind of been in this new base, it's still not asymmetric. It's very symmetrical. Like it's not proven that they're going to be able to make this AI software. And now that the AI software has been kind of proven out, there's like you're saying 95, 98. That's very asymmetric, as an investment. And so making those asymmetric bets as well as knowing something no one else knows, not betting with the whole crowd, being greedy when people are fearful and fearful when people are greedy, based on fundamentals, obviously, is where you really get the massive returns.
Yeah, I'm just going to throw in this comment real quick. But when I was listening to Palantir's last big like AI idea, oh, what are they called? Um, I forget what they're called. But Alex Karp was just
AI
talking maybe a couple
Pecan.
months. Yeah, I think it's AIPCon. But he was just talking like a month ago. He also went on a Mit's channel during that as well. But it was so funny because Palantir calls it ontology, and ontology is just like creating a brain map, a digital brain map of your company. It's like maybe like a digital twin of your company. You could think of the ontology, and it is what allows the AI to have the context it needs to do what it needs to do, and like it's what gives it context, like the data connections and the tools connections, because you literally have a digital twin of your company. So the AI sees your company. But so Palantir calls that an ontology, and UiPath they realized early on that they needed the same thing. You need to give the AI the right context for it to be actually effective in an enterprise level role. But they called it orchestration, not ontology. And orchestration it means the exact same thing as what Palantir was meaning when they were saying ontology. However, because people know what an orchestra is and understand like a oh, who's the person called who's like waves their wand or whatever? Who
And
a conductor?
yeah,
Yeah,
I want to say conductor, but I'm not positive that's right. I think it's right though.
yeah. But it's orchestration, and people understand. Oh, they're
Mhm.
making all the instruments work together, and they understand the whole thing, and they tell the drums when to come in, and they tell one part when to crescendo, and it's like the orchestration has a real meaning, whereas ontology doesn't mean anything to like 99% of people.
Mhm.
So I think UiPath is using a lot better verbiage here to explain what they actually do. And in Alex Karp's presentation at this last AIP con, he literally was like ontology, and I was like, wait, was he about to say orchestration? Now that UiPath's been saying orchestration all the time, but I wasn't certain. And then he went on a Mit's channel, and all throughout Amit's channel, he just kept saying orchestration, and I was like, yes, he's totally added this to his verbiage, which is why it almost slipped out when he was presenting, because now he's using it, every single day throughout normal conversation, because people understand what orchestration means a lot better than what ontology means. And he's realizing that it resonates better, it hits better, it's just better communication. But he didn't want to say it actually on stage in his keynote because it points back to UiPath. And like, that wouldn't mean anything, right? If that's the only thing you heard, right? Like it just, but because of all of the dots, I'm like the conspiracy guy on the wall with my maps and connecting all my dots with the lines. Like that's kind of what it feels like doing this sort of stock research. So that was like I'll put Alex Karp's face on my wall now, and then right, like ontology came from his lips, and then link it back to all of
Mhm.
UiPath's you said, or sorry, orchestration, all of
Yeah.
UiPath orchestration. Yeah.
Yeah, we've talked about Alex Karp and Daniel Dinas quite a bit. I want to double click on that. You often, I know from our conversations, associate Europeans and Europe in general with bureaucracy. So, you know, Daniel Dinas is European. What makes you believe in him? Like he is a European, and he doesn't necessarily have that American spirit. What makes you believe in him as a founder?
Okay. Well, first of all like most Americans are immigrants, right? And our last name is Polish, so we come from a European heritage as well. But what makes an American isn't where you come from, it's it's how you think now. And America is a place for futurists. America is a place for builders. America is a place for experimenters and rebels in a way, as long as they're rebelling for the good of humanity. And I think that like our embrace of like capitalism, like I think in America we think everyone deserves like a good starting line, like starting from a similar line, but where you finish is completely based on your own merit. Like that is what America stands for, that the starting line can be the same, but the finish line, it needs to be different to incentivize people to do amazing things. So when you're someone who leaves your country to find more opportunity, I mean, Daniel's story is crazy. So he wasn't that interested in computers as a kid, and he was like almost 30 or something, and he was what's the country that he's from?
Romania.
Yeah, Romania. So in Romania, it's quite a poor country from like American standards, and especially back in the 90s. I think Romania might have even been communist at that point. Um, and he was talking with one of his friends who had just gotten a job as a programmer, and Daniel asked him, "Wait, how much are you making as a programmer?" And the guy said 300, and he's like, "Oh my gosh, like 300 a month? Like that's crazy." So that's what you could make as a programmer back then, and to Daniel it just seemed insane because Daniel has had a period of his life where he was literally homeless, couldn't even afford food. So he's had like a very rough period, and he was so just over the moon about this idea that if he learned how to program, he could make $300 a month. That he bought a programming book and learned to program through a book before he could even afford a computer.
Oh my
So
goodness.
this is American. Like this is like who care? Everyone would tell me I couldn't do this, but I'm going to do this, and then you go and do it. So he learned to
Mhm.
program through the book, and then he got a job as a programmer, and he started earning the $300. Um, and he started to realize that he loved programming as well because he fell into this flow state. And he's talked about how he doesn't really believe in happiness, at least the pursuit of happiness. He thinks when you're pursuing being happy, that's when you're most miserable. And he feels like when he's in this flow state, when he knows what he should be doing, and I feel so similar. I just resonate with him in a lot of different ways. When you're doing something that you know is valuable and you're kind of in this flow state, which I feel kind of in right now in a way. Yet I don't like recording videos, which I need to do this more honestly, based on this realization here. But he realized he was happy, when he was coding, and he got really
Mhm.
good at it to the point where he was hired by Microsoft, moved to the United States as a coder for Microsoft, and he was quite old, like by normal standards before he decided to actually start his own company. And he describes his path in for UiPath as doing all of the wrong things. He's like, I did every single thing wrong. The first wrong thing was he decided because he could hire engineers for cheaper back in Romania, that he would move back to Romania to start the company instead of staying in the US and starting the company. So he's like, that's where the first mistake I did was, and they just continued from there. But what does that tell you about his resilience? That he makes this mistake, realizes fixes it. So then the other thing that makes me really like Daniel is I actually linked this in the Discord. Maybe we should link this in the video description as well. A talk that he gave 5 years ago, before UiPath was actually even a public company, I think. And he talked about UiPath's culture, and he talked about how important the culture of UiPath was and is, but it's completely based off of one word only. One word defines the entire UiPath culture, and that word is humility, being humble, understanding, um, and I should add that he makes sure to point out that Romanians hate the word humble because actually in the Romanian language, humble means subservient, and it actually has a connotation of slavery. So Romanians hate the word humble, view it as being like a servant who doesn't control themselves, like a slave, is the connotation of humble. But how the lessons of running this business and being humbled over and over again, but then also realizing that they finally found product market fit when they stopped wanting to build what they wanted and actually listened to what the customers were telling them and were humble about the actual offerings that they needed to give the customer and stopped viewing the customer as stupid and instead viewed them as intelligent and the ones that we actually need to learn from because they know more about how to do their jobs than us. And if we're going to try to build software to help them, it's like we have to be humble. So his whole transformation of literally breaking away from his own culture that hates the word humble and making humility the one defining word of UiPath's entire culture, like that, I think it shows a real transformation there when you understand how much his people actually hate the word that now represents the culture that is his company, that is his legacy. So, and
hmm
that's the sort of thing too that I think is going to make them succeed in agentic automation. Is a lot of the interviews I've seen so far, they're just talking about how a lot of this is working with their customers and finding out what sort of tools their customers need them to build so that they can help their customers fully automate these tasks. And you have to be humble in your approach there. And he says now, like, we work for like the very biggest companies in the world. He's like, these people are very smart, and we need to listen to them and let them form our products by truly believing them when they say this is what will be most useful for us in building that thing.
For sure. So first off, him not having the American spirit is a massive mischaracterization. He is fueled by the American spirit of innovation. On top of that, humility, admitting his mistakes and learning how to lose well, making those mistakes, still pushing forward, changing his opinion on things. And kind of third, he sounds like he's kind of characterized by the Costco algorithm, which is just driving home more value for customers per dollar spent on their product and really just continuing to refine it. So super interesting. And that sounds like, the founder I want running every single one of my companies I own. Um, so this is something we got asked about on X. How do you interpret him selling about 4.5 million shares since May, according to the NASDAQ? It's a little bit hard to find exactly how many shares he owns because people typically own shares through multiple different methods, trusts, personally, their spouses. So I think he owns around 32 million. So 4.5 million is around 6% of his shares. How do you interpret that as an investor?
I don't think that number's right because what would that percentage ownership be if he only owned that amount?
It'd be about 6%. Sorry, he didn't sell 6% of his shares. He owns around 6% of the company.
Yeah. So my
6 to
understanding,
10%.
yeah, my understanding is he actually owns around 20%. He has been selling some, but also my understanding of that is most of those sales are because he gets a lot of stock compensation, are covering the taxes he has to pay on those vested shares, and that's what most of those sales are. But this is the general way to think about insider buying and selling. You can read. I think there is some signal in buys. If an insider is actually using their own money to purchase their own shares on the open market, I think that there sometimes is signal in that for sure. Um, Insiders selling, from my experience, there's really not that much signal in that, because most insiders do sell to cover taxes when they have shares vesting, which means like if you vest, like sometimes you're selling like 20% of those shares to cover the taxes on those shares that you're receiving. And there's no signal in that at all because they're literally the sale is actually a signal that their share count is increasing overall.
Hmm.
And then the other thing is there's just so many reasons that you sell. So there's only one reason you buy. You only buy a company like because you think you're going to make money on it. But there's so
Hmm.
many reasons you sell. You sell because your mom is sick. You sell because you've been working at this gosh darn company for 10 years and you've been putting all this sweat in and it's finally time to upgrade your family's house. Like
Hmm.
there's so many reasons why you sell that have nothing to do with whether or not you think the company is going to be worth more in the future or not. Um,
Yeah,
so I think
that's a
you can
great way
read
to
into
frame it.
buys. I don't think you can read into sells that in the same way at all. I think most sells are actually noise and don't give the signal that people think they give. But buys, I think, are a lot closer to the signal that people think they give. The other
Yeah.
thing is just keep in mind Alex Karp was selling shares at $6 on Palantir before they
Mm.
released AIP. So
Yeah.
that stock is now
Yeah.
140 or something.
Yeah.
Like
And just for
less
some more
than 2 years
context,
later.
guys. Yeah, well, for more context, if you actually go to Nasdaq's insider selling, UiPath net positive, so insiders have net positively bought 5 million more shares than have sold over the last 12 months. So just a little bit of context there. So I would say the overall signal is that people inside the company are having a positive feeling of the direction the company is going in. So yeah, we're going to the latter half of the questions. Um, we'll talk about
Okay,
Path versus Palantir in a second.
my battery is getting kind of low, so I think I probably have like 20 minutes left. So that probably
Okay.
means like
Here,
maybe two or three
let's
more
do some
questions.
rapid fire. Let's do some rapid fire then. So try to
Okay.
answer in one or two sentences. So how do you determine position sizing for a new conviction like Path?
So
These aren't really
initially, like I
rapid fire
said,
questions, but
I'll do my best.
but be
Initially,
quick.
like I said before, I start with a very small position that's not actually going to affect my portfolio's outcome, and that incentivizes me to just dig a lot deeper. And because normally I only own like five or less stocks, eventually a stock that becomes a big position is going to be like 20% of my portfolio or potentially more, maybe like 15, but like a big percentage. Like I don't just hold
Mhm.
stocks for the sake of diversifying. I only want to own what's going to go up a lot. Um, so
And you can do that because you do so much research.
exactly, your position size has to be based on your own conviction in the outcomes. So for me to build a big position, it can't only be something that can go up a lot. We've talked about this a lot, but it has to be asymmetrical. You've mentioned that in this podcast already, but that means that it has to be able to go up a lot and it has to not actually have that much downside that it can go. Because I care a lot about losing my capital. So even though I'm investing in a
Yeah.
very small number of companies, I don't want to put it in companies that are going to go down 80%. I don't want that
Yeah.
potential at all. So I
Yeah.
want to buy stocks that I feel like have very little downside. I mean, if I'm starting a position and it drops 30% and I'm still building it, that's fine. Like I can't know what the
Mhm.
market's going to do, but that it has to be like 30% is like an insane buy. Like there's like
Yeah.
yeah, so it has to be
For
based
sure.
off your conviction and based off of the asymmetricality of it. And the more you want to add, the more you need to understand. And that means not only researching bullish stuff, in favor, but also looking at the short sellers. What are they saying about it? You have to understand all of their arguments and know that they're wrong because you
Yeah.
understand the argument better than they do. So yeah, it's about building conviction. That's going to allow you to have a more concentrated portfolio and I think higher returns.
Yeah, and that's also has to do with personal risk tolerance as well, which you have to determine for yourself. So we have
Yeah, but
quite high risk tolerance. So
if you do enough research though, it doesn't feel risky. Like I can
yeah,
have
definitely.
100% of my money in Lemonade, and as long as I don't need it over the next 5 years, I know it's going to be worth more.
Hmm.
And
All
that's
right,
people would say I'm
let's go
cocky,
on.
but I think it's just I've done a lot of research and just like really feel that sort of conviction. But you cannot buy stuff based off of my conviction because when it's down, you're going to think
Mm,
I'm full of it and you're going to be making comments. So if the conviction's not your own and you're going to sell at the bottom and you're actually going to lose money. So if the
yeah.
conviction's not your own, it's very dangerous. Okay, sorry.
Nope, you're good. You're good. I'm just trying to keep us on schedule here. So Path is obviously in competition in Palantir. Really quickly, just give a few areas on both sides that you think each company has an advantage in.
Well, right now, one of Palantir's biggest advantages that cannot be underestimated at all is the fact that they have the cultural uh, excitement around them. Like OpenAI, every time I've heard someone mention AI since I've been in Greece, like they say OpenAI or ChatGPT. Um, when you have the like people's mental space, that's big. That really matters. So when people think about enterprise automation right now, they think about Palantir. When people think about electric cars, they think about Tesla, and that's a huge advantage in a market. So being the first mover, it doesn't guarantee you're going to win. Yahoo was out before Google, and Google destroyed them. Having the best product is what matters, but you have to overcome that. So Palantir is a big advantage there, where they already have the mental uh, like they're in everyone's minds already. Another
Yeah.
place where Palantir has an advantage is I think that they can offer more insightful ideas to C-suite on how to better manage their business. Like one thing that Palantir is really good at with Foundry is like actually helping you work on your supply chains and stuff. Like actually thinking about your business and where to like truly cut inefficiency. So one way to think about it is right now with RPA especially, UiPath probably has an advantage in actually going in and automating your task. But Palantir is going to be better at telling you, hey, that task, it doesn't actually even need to be done. You could just, make this change here. Or like you have stuff sitting in inventory for way too long, and if you just ordered differently, you would have less goods going bad. You would like that sort of thing is where Palantir has an advantage. Whereas as UiPath actually goes in and it helps you automate 50% of your healthcare claims or whatever, and then passes off the ones it can't fully do to the human in the loop. However, Daniel Dinez, he literally reads Y Combinator, their daily news. So he's keeping up on all the startups. And UiPath actually purchased a AI company helping with like logistics and warehouse, like that sort of like higher end S suite management stuff. Um, they said it's not going to have a material impact on the financials because it's a very small startup, but they've already integrated this technology and this talent. He's just buying this AI talent, right? He's integrated it into Maestro, and it was actually the Body Shop who, funny enough, Peter Lynch invested in way back in the day. They actually have a customer interview on UiPath's YouTube channel that you can look up, where they are talking about the kind of similar sorts of advantages that Palantir, like I was just saying, has a huge advantage in, like understanding managing all your warehouses and everything. They said Palantir really helped them. Or not UiPath. And they were using UiPath's new startups software to do those things for the body shop. So I think that Daniel Dinez understands the whole scope the whole industry even better than I do. And that's something that is not true about many CEOs, by the way. You cannot just take that for granted that a CEO is going to understand the space better than you, because if you really understand the space, a lot of them won't. But Daniel Dines actually does understand it better than me, and that is also something that makes me very confident in investing. Where like even the things that Palantir has an advantage in today, he's making acquisitions and stuff to fix those talent gaps and those software gaps. So he sees it, and I see that he sees it, and I'm like, okay, he sees it.
Hmm. Yeah, so no, Palantir has advantage in a few spots, but UiPath's hot in the hills. Sounds like trying
Mhm.
to kind of bridge those weaknesses. If you had to summarize, put the path thesis into a few sentences, what would it be? Or one
So
sentence, maybe.
Forbes called Daniel Dines the robot billionaire, in an interview, video that I watched like 5 years ago. So I guess the one sentence UiPath thesis would be, don't count out the robot billionaire in the age of AI.
Oh, that's great. Okay. I know you love thinking about the future. So what does path look like 10, 20 years from now in your mind?
So one thing that you have to understand as an investor before I answer this question is that you have to be very willing to change your mind. If new evidence comes out, you cannot stay in your ways. Like you have to understand how that piece of evidence changes your thesis, which means you have to understand your thesis well enough to know how it really disrupts it. And if something disrupts your thesis, you have to be willing to change your mind. And that is how you can be heavily invested in something and be wrong and still be fine another day. Um, but the problem that people make is they get really, really hard headed in their belief. They now like they believe the company is themselves, and they're unwilling to ever sell it or change the thesis, or anything like that. Which I think I had the desire to do with Tesla. Right, I can't sell Tesla. Right, it's done so well for me, but that's not why you hold a company. So before I answer the 20-year question, this is based on my current views. And if something changes, which is why you need to be subscribed to this channel and follow us on X, it's like I'm going to tell you guys, and I'm going to explain what happened to change my thesis. Now, I think that the bear case, if I'm wrong, is not actually that bad, like because the company is already so de-risked because it's already selling so cheaply, that even if they don't become a huge player viewed as the number one or number two with Palantir, it's like it's your investment's going to be fine. Like I think you're going to do pretty decent, just with some AI and RPA because I think it works so well together. Um, but yeah, I think that they could easily be, a trillion-dollar company, and I'm not. I don't want that to become cheap. I mean, there will be a lot more trillion-dollar companies in the future than there are now. It's not just going to be the Mag 7 that are trillion-dollar companies in 20 years. I think there's going to be, there could be over 100 trillion-dollar companies in 20 years. I don't know. It depends. It depends how AI really changes the market and really changes productivity. But if AI does really change the market and really does change productivity so that there's over 100 trillion-dollar companies, Path is going to be huge because Path is going to be one of the companies that helped enable that. So right now, if you look at kind of where the hype very early on is in like right the private sector with the actual model companies, so like OpenAI and Anthropic trading like 100 times sales. Like they're like Palantir level valuations. But that's where a lot of the hot focus was, and then it moved to the chips with NVIDIA. NVIDIA is not nearly as overvalued. Like people are very skeptical that data center spending is going to continue. So NVIDIA doesn't even have as crazy of a PE multiple as I think it would if we were in a real bubble stage already. But people understand there's value there, and in the data center installers and that sort of thing, people understand there's value there. But there's only value in the model makers, and there's only value in the chip makers and the installers if there's going to be value in the end game, which is actually customer interactions and company efficiency, and the AI actually has to do useful work. But I think the market doesn't know yet who is using AI to do useful work. But that part has to, that last piece of the puzzle has to come in order for these other two pieces of the puzzle to actually have the value that the market is giving them. So there's a guarantee that like there's going to be a big pop somewhere else, and that pop's going to be in software. And right now, all of it has channeled into Palantir. Maybe some of it has gone into Tesla with the belief of the Optimus bot being a use case of it and full self-driving. But Lemonade is a perfect example of where that value is going to pop up. The market hasn't really found yet. And Path is another perfect example of where I think this is where the money's going next. This is where people realize the value of AI is coming next. So I think Path perfectly fits there. And right now, Palantir's commercial automation is up to over 50% annualized year-over-year growth. I think they're like the total value of their contracts, it might have gone up 80% or something year over year. It's insane. So all of these big companies have a lot of automations to do, a lot of automations to do. And they're going to start small. And this is going to be a decade plus process of these enterprise 500 companies, enterprise 1,000 companies, like to really automate their businesses. And they're never going to fully automate anything, like everything as fully as a company like Lemonade, I think. But there's like several decades of work for companies like Palantir and UiPath to do. So
For sure.
right now, UiPath's at like what would they just put up a 14% revenue growth or something with their current RPA business. Adding in Maestro, like I wouldn't be surprised if they return to 20, 30, 40% revenue growth. And if that happens, like this stock's going to 10x and it's going to 10x quickly. Um, Now, the fact that I know Maestro is useful, um, it doesn't guarantee they're going to get back to 40% growth. But even if they stick out the 14% growth that they're at today, and that doesn't slow down because it's useful enough to keep their current growth rate going, um, it's still too cheap because it's down 85% almost, and the market has already counted it out. So even then, it's a good investment right now, even if you're just buying it as a value play growing 10% a year. So I think that this is probably a 100x to a 1,000x stock if Maestro is anywhere good as I think it is.
Does that kind of encapsulate why you prefer investing in Path over Palantir? Kind of that asymmetry in the fact that Palantir's already kind of caught the bid.
Yeah, exactly. It's just because Palantir, it's like Palantir, its growth going forward is probably like more certain than Path still. But it's still not worth buying because it's selling for 108 times sales or something like that.
Yeah.
And UiPath is selling for 4 times sales. So if UiPath 10X is it's selling 40 times sales, it's still 60% discounted to Palantir as far as
Hmm.
like the price you're paying for the sales.
Yeah. No, very good. You often talk about how Peter Lynch and Warren Buffett are kind of your mentors. What do you think they would say about Path and kind of their framework?
Well, all of my mentors believe that you should only invest in things that you understand really well. So I don't think I don't know if either of them would understand Path well enough to invest in it. And that's why
Hmm.
I think you have to take big bets when you're young. Because when you're young is when you're connected to the next big thing. And eventually it's like my brain is gonna harden up. I'm gonna have a harder time learning new things than I do currently. I'm gonna have my fingers not gonna be as good on the pulse. And I'm gonna need a I'm gonna either need to have really young people that are super brilliant on the team, um, or something to help me understand these plays. But when it's someone else giving me the advice too, I'm not going to be willing to put 50% of the net worth in it. So
Hmm.
I think that's why when you're young, when you have the ability to truly understand these things, when you have been graced with the ability to think through things at the level that you need to have high conviction in it, I think that's when to take the biggest bets. And it's when you have the most working age ahead of you, so you can afford to be wrong and mess up and try again still. Whereas when you're old, the risk reward that you're thinking through is just completely different. So yeah, I think
Yeah.
that I can take really big bets right now because I feel like I need to. And I don't know what my mentors would be investing in right now, but it probably wouldn't be as techy or computery. Now, I think if they did understand these companies like I do think they would be buying them
Mhm.
because I'm making my investment decisions and I'm running my valuations based off of the advice that they gave. And I'm deciding something is cheap or expensive, based off of the parameters that Peter Lynch told me meant that a company was cheap or expensive. So I'm following their advice because they destroyed the market. And that's why I wanted to learn from them because I knew what they did, performed like it did. So at least, it didn't hurt their ability to do that because they achieved it. So while I don't think everything that they taught me is right because we're all fallible, I think that what they believe and what they taught me was good enough to destroy the market for a decade. So that means that it's good enough for me too. So I'm not trying to reinvent the wheel. I understand different technology. I'm really into software. Um, but like I don't understand the hardware as well, so I'm not invested in Nvidia. I'm not invested in AMD. I'm not invested in SMCI because the hardware it's not my expertise. Um, so I'm not going to invest in it. That doesn't mean that there's not good opportunities there, but I think the bottom line is what my mentors would say is there are enough opportunities in the world that you can find one in an area that you have expertise in. I just met a guy the other day who runs a small like fruit like grain growing company in the U.S. So he understands agriculture. Um, and his business is doing pretty well, and it mostly doesn't like he doesn't need it. He doesn't need to be there to run it either. So I was telling him about investing, and he was getting pretty interested in it. So I told him about Peter Lynch and went up on Wall Street and stuff. But the other piece of advice I gave him was you already understand the balance sheets and the income statements of your industry. So look for opportunity in your industry. Like when you go look at stocks, don't go look at Meta, unless you understand it really well, but start by looking into the balance sheets of the companies that you actually understand, because that's where you have extra expertise. And like he was telling me about the price of avocados and how long it takes it to go down the supply chain and how people selling avocado toast expensive right now are making all this margin because avocados are actually cheap. So like he understands this sort of like
Mhm.
he understands that industry in the depth that he needs to know that this bean producer is a great buy because half the beans are not going to grow well this year, and this company has the good beans and they're going to be able to be like increase the price this season, and he's going to be able to get a double or triple out of that. But so yeah, so go into the industry that you understand, but then some of the basics are just true everywhere about valuation and about some of those just like core concepts about like a company's price on the stock market not being its value, like just like these core things you need to understand, where if you don't know them, then if the neighbor comes to your house and says your house is worth this much right now and you don't know how much your house is actually worth, like it can really scare you. It can be, oh, I was wrong to buy this house, look how much it's down. So those core concepts I'm still 100% running off of. So I think if they understood these stocks, yes, they would buy them, and I'm terrible at rapid fire.
No, you're good. You're good. I think, I mean, there's not a time limit on this. So I really
Yeah,
hope
I'm at
everyone's
9%
enjoying it.
battery
And
life.
okay, this is the last question anyway. So this is perfect. So we've, I think, really covered UiPath, well. So I just want to end with more of a general question, which is what have you learned about the world not related to investing while deep diving Path? Either from listening to
Yeah, okay,
Daniel
yeah.
Dine, Dines, or
Mhm. Well, besides all the humility stuff, I'm not going to talk about that again. Let's talk about something new.
Mm,
One thing that I really agree with is in the early days, like watching old interviews with Daniel Dines, people asked him a lot whether or not robotic process automation was going to take jobs. And it's really interesting, funny, because the same thing is getting asked about AI now. Uh, but I think what his answer was back then really rings true, which is that I don't think humans are really made to do these repetitive tasks. Like we were made to build relationships and like create puzzles and discover and learn and build. So doing a copy paste it's not that fulfilling, especially when you have to do it a lot. Like I get so annoyed when I copy paste something into X or something and the formatting's all messed up and I have to go and like just hitting enter 7 times in a row is annoying as a human being.
Mm,
Now maybe that says more about my ADHD or something. But I think what he says is true that humans were not made to do these repetitive things. There's other things that we're way better at, and if we can get computers to do all the boring stuff, he's like, what we're doing is we're not taking people's jobs, we're making everyone's job way more awesome because all the repetitive stuff that they hate, they don't have to do anymore. Um, so I think that's something I learned about humanity is that we do like new things and we do like exploring, and I love building the case for a company. Like you start from a clean slate and it's almost like painting, but you're painting the quality of a case in your mind, and there's cons that run against advantages and arguments and responses to those arguments, and you're painting a tapestry that is your view of that company's potential outcomes. And it's really fun, and humans should not have to copy and paste stuff from their email to Slack every single
mm.
day over and over again.
Yeah, absolutely. No, beautiful. I think it's such a kind of exciting future, and also just about for you personally and how investing is kind of like painting. And I think ultimately everyone wants to find their form, their medium of art and self-expression. So for you, this is investing. So it's an incredible. So, well, thanks for joining me, Jake, and thank you everybody for watching. I hope you guys enjoyed and learned a ton, not just about UiPath, but investing in general, and hopefully, a little bit about life as well. So make sure you hit like and subscribe for more content like this in the future if you enjoyed it, and have a wonderful day.
Yep, I really enjoyed this, Aaron.